Good day, ladies and gentlemen, and welcome to the Q2 FY23 earnings conference call of EKI Energy Services Limited, hosted by Nuvama Wealth Management. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Swarnim Maheshwari from Nuvama Wealth Management. Thank you, and over to you, sir.
Thank you, Michelle, and good afternoon, everyone. On behalf of Nuvama erstwhile Edelweiss, I welcome you all on this EKI Energy Q2 and H1 FY23 Concall. From the management today, we have with us Mr. Manish Dakkara, CMD and CEO of EKI Energy, and Mr. Mohit Agrawal, CFO of EKI Energy. Without further ado, I would hand over the call to Mr. Manish for his opening remarks, and then we can have the Q&A session. Thank you, and over to you, Manish.
Thank you, Swarnim. Good afternoon, everyone. Though most part of festives is behind us, before moving on, I would like to wish you all that may the guiding light bless you all with happiness and quality time with all your loved ones. Hope you all had a good time with your loved ones. Trust you have all been doing well. Wishing you all continued good health and good times. Today, we as a team welcome you all to our earnings call for Q2 and half year ended FY23. I would more importantly thank each one of you who are onboarded us as our stakeholders and well-wishers. Thank you for being an important part of our journey and supporting us in our quest to drive the world towards a net zero future. Today, with me for the call is our CFO, Chief Financial Officer, Mr. Mohit Agrawal, and our investors relationship partner, Orient Capital. As we close past half the year and ring in another quarter, I am delighted to share with you all that we have yet another half year of amazing performance and continued growth. For H1 FY23 on a standalone basis, our top line has grown a phenomenal 50.4%, while EBITDA grew by 74.3% and PAT by 73.3% as compared to the same period last year. On a standalone basis for H1 FY23, EBITDA margin stood at 28.5% and PAT margin stood at 21.2%. Our numbers are proof to the incredible growth that we are all doing, being able to withstand the global macroeconomic headwinds and fears of slowdown to show such resilience despite the odds is an incredible feat. To emerge stronger from all that is per excellence. We are a net debt-free company. Our cash flow from operations has improved as compared to same period last year. In H1 FY23, cash flow from operations stood at rupees 151.3 crores as compared to 34.6 crores last year. Also, our liquidity has improved considerably for H1 FY23 and stood at rupees 186.5 crores in the form of cash and liquid investments. This quarter, we achieved many milestones. The first one is we became the first ever company to list the plastic project from India with Vera, a global accreditation standard located at Washington, USA. We will soon become the first ever company to generate international plastic credits for collecting and recycling plastic waste in the country through this project. Second one is we partnered with Singapore-based ICAM Impact Climate Asset Management PT Limited to launch a INR 1,000 crore, that is around $125 million climate impact fund to develop GHG greenhouse gases mitigation projects with a deep focus on community development across the globe. EKI will invest up to INR 200 crores, that means 25 million USD, as an anchor investor in the fund. EKI will also act as a project implementer partner. This venture will ensure the long-term sustainable supply of quality carbon credits, as well as place the company in global climate finance market. Third one is our subsidiary GHG Reduction Technologies Private Limited has completed the capacity expansion to achieve one of the highest production capacity in the world. Our manufacturing plant located at Nashik now has the capacity to manufacture up to 5 million improved cook stoves per year, the highest ever in the biomass category. Our green cooking initiative continues to drive community upliftment while also helping in the generation of high quality carbon credits. We have distributed around 5,500,000 cook stoves till date within India. Fourth one is further enhancing our leadership as most trusted and preferred partner for end-to-end management of smart city projects across the country. We have now been onboarded by Varanasi Smart City. We now offer expert advisory or consulting services for the end-to-end management for all the climate-related projects of Varanasi Smart City, including renewable energy projects, energy efficiency-based projects, waste management projects, and other technological projects. Fifth one is we are now part of the country's first of its kind strategic alliance of industry stakeholders from the realm of climate change and carbon credits in India. The Carbon Markets Association of India will work towards empowering India's journey to net zero through climate positive advocacy and initiatives. It will aid the establishment of a robust domestic carbon markets in India. The association will collectively formulate recommendations across a wide range of topics, which includes National Emission Trading Scheme, Article 6.2 of the Paris Agreement, Article 6.4 of the Paris Agreement, Carbon Border Adjustment Mechanism, CBAM, carbon neutrality, net zero goals, and voluntary carbon markets, amongst others. I'm the first president elected for this association. We are glad that the Power Minister himself has put the stance on the ban of carbon credit export from India to other countries to rest. He clarified this to media last month on the sidelines of an industrial event and stated that the carbon credits from the country will continue to be exported worldwide. This clarification was long due and will now enable the entire industry ecosystem to continue its growth towards strengthening the country's domestic carbon market with a steady supply of credits that will further accelerate India's journey to a carbon neutral future and pave the way for the market to unlock new potential and unleash a new era of environmental activism in India. Carbon credits are imperative and integral for climate and positive actions. The Indian carbon market is gearing up for the revolution with the development of National Emission Trading Scheme or National Cap and Trade regulatory carbon markets. The Energy Conservation Act 2022 will further empower the domestic carbon market. A robust National Emission Trading Scheme will enable a strong supply of carbon credit to meet the country's NDC and export the higher for higher forex, economical, and development benefits. Meanwhile, the demand for voluntary carbon markets has been consistently rising exponentially, even as corporates and businesses are increasing their climate action investments. And since voluntary carbon markets are not being governed by Article 6 of the Paris Agreement, there is no any impact, there is no any regulation over the voluntary carbon markets, not only in India, but across the world. We estimate that about 30% of the global share of voluntary carbon market that have got retired belongs to our portfolio during last quarter. The future market looks promising for EKI and will grow substantially with the surge in supply of credits, origination of credits. Demand of credits by off-takers, that means through corporates and businesses around the world with net zero commitment, as well as National Emission Trading Scheme in India, which is expected to be operational in full pledge in next 3 years timeline. Globally also, it is estimated that the carbon markets will grow exponentially. McKinsey estimates that the demand for carbon credit will surge, and they will be worth upwards in the range of around 50 to 150 billion USD by year 2030. This is a great news for Team EKI, and we all set to make most of this growing opportunity. We are now gearing up for Conference of Parties meeting number 27, that is COP27. We started our journey to COP27 in April as we imbibed a new brand identity that focused on our vision to steer the planet to a net zero future. We also announced a host of strategic plans in preparation for COP27, and this included our commitment to become a net zero company by year 2030, in addition to defining a target to mobilize up to 1 billion carbon credit within next 5 years, that means by year 2027. As we continue our journey together as one team, stronger than ever, we promise to keep the aiming high. We are enthusiastic about the next quarter and are constantly working towards achieving our strategic growth objectives. None of this, however, could be accomplished without the support and trust you all have on us. Thank you for being our constant support. Now I would like to hand over the call to Mohit for financial updates. Thank you very much.
Thank you, Manishji. Good afternoon to everyone. Yes, we have indeed had an exceptional half-year performance again. Team EKI is growing stronger each day. Let me now take you through some of the amazing financial highlights for H1 first half of financial year 2023. In H1 FY23, our standalone revenue increased by 50.4% to rupees 957.6 crores compared to the same period last year. Also, our H1 FY23 standalone EBITDA margin increased by 390 bps to rupees 272.9 crores as compared to the same period last year. H1 FY23 standalone PAT stood at 202.6 crores and PAT margin stood at 21.2%, which is an increase of 280 bps from the same period last year. As Manish already said, our liquidity has also improved this quarter and it stands at 186.5 crores, which is a testament to our commitment to grow by following prudent financial practices. This is all from my side. We will now open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and 1 to ask a question. We have the first question from the line of Venkatesh from Intro Hive. Please go ahead.
Hello.
Mr. Venkatesh,
Yeah, hi.
Please go ahead.
Yes, and I have a quick question on the in the last quarter we have a sequence of investor presentations. I would like to know is there any progress or update on the investor presentations?
So you are asking about the outputs of the calls that we have done?
Yes, correct. Yes, Manishji, correct. Is there any outcome or any of the update in progress, anything which you would like to share?
Yeah, so this is the regular activity that we do call with various investors, and definitely the interest is growing up within India at the within the domestic level, at the international level. Once we have any significant updates, definitely at the right time we will do come up with the proper update related to the same to all for all stakeholders.
Okay.
Any further
questions? Thank you, Ms.
Thank you. We have the next question from the line of Rajesh Chaudhary from Zenith. Please go ahead.
Yeah, good afternoon. My question is regarding the plastics recycling project that you have mentioned in the call. So how big is that market and how much revenue are we anticipating from that?
Yes, so carbon credit is an environmental commodity. Similar to that, plastic credit is also going to become the similar commodity. As you know, various companies, specifically at the international level, they had declared that they want to become plastic neutral. And to become a plastic neutral company, definitely they need plastic credits. So one carbon credit is 1 ton CO2, carbon dioxide or greenhouse gases emission reduction from the atmosphere. Similarly, if we do collect 1 ton plastic, then we are eligible to earn 1 plastic credit. Further, if we do recycle that specific 1 ton plastic that had been collected, we are eligible to earn another plastic credit. So such kind of plastic credits, they are at the nascent stage in the global markets, plastic markets. And but as you know, in India, at the international front, various organizations in India, we do have EPR, Extended Producers Responsibility. Similarly, at the compliance and at the voluntary level across the world, there is a high momentum related to this plastic waste reduction, and the market size and the rates would not be. I would not be able to give you the proper answer for the same because this is specific commodities at the nascent stage. But we are very sure that in near future, in next 2 to 3 year timeline, it will get high momentum, and we are getting positioned ourselves in reference to generating the similar quantity based on the demand as compared to carbon credits. We are getting ourselves positioned.
So would you have any ballpark estimate of the revenues that we can garner for say next couple of years?
It depends on the pledges that the international community will do sign and the demand that will get generated. So as of now, the market is at the nascent stage, but definitely once we'll do get good momentum, since you know across the world with Vera, which is based at USA, around 20 projects had got applied and only 2-3 projects had got registered to get the initial supply of the credits. So the whole market is at the nascent stage, and we are once it will grow, we do have a plan that we should be having good market share globally as what we do have in carbon markets. Yeah.
Okay, fine. Thank you. Yeah.
Thank you. We have the next question from the line of Abhishek Sarda from Hem Securities. Please go ahead.
Hello. Hello.
Kindly proceed with your question, Mr. Sarda.
Is that audible?
Yes, please proceed.
Yes.
So one thing I want to ask for the volumes for this quarter, for Q2 FY23.
Yeah.
So what are the volumes for this? Yes, sir. For Q2 FY23.
Yeah. So during the last quarter, we had supplied around 19 million carbon credits to the global carbon credit industry.
Okay, sir. So it's similar to Q1 FY23, right? 19 plus 19, 38 million that you have given in H1 FY23.
Yes. To our industry, as you know, the second half used to be in the better position as compared to the first half, and the guideline that had been given in the past during the past calls, definitely we are on the same track to follow the same, to deliver the same. Yeah.
Okay. And so what are the expectations that till end of FY23 will be, like the credit sold will be how much, the volumes?
So during last financial year, we had supplied around 87 million carbon credits, and around 100 to 105 million credits. We are sure that we will be able to supply the same. That means approximately 20% growth in reference to the volume that we had supplied as compared to the last year.
Okay, sir. And sir, the major reason for the muted revenue and EBITDA in terms of QOQ basis, is it some seasonal, like Q2 is not seasonally not good, or some other reason?
As I stated, in our industry, major buyers are located at the developed economies like Europe. In Europe, their financial year and calendar year used to get ended during December. During first half, the buyers, they used to inquire, they used to take the pulse of the market, while during second half, to exhaust their budgets to become and to achieve their carbon neutrality goal, they used to procure during the second half. That is the very well known global trend in our carbon markets. So the second half always used to remain very positive, giving a very good result as compared to the first half, and we are anticipating that we will do follow the same past experience.
Yes, right, sir. Understood, sir. The last question I want to ask, that like Europe is major contributor of our revenue, right? Around 55%, as you mentioned in the investor presentation. So are we witnessing any slowdown in demand from this region due to some macro issues, or is it fine?
Yes, because of the Russia-Ukraine war, as you know, the energy prices are high, and there is a impact during the first half, as you know, because the war had got started around during February. As per their first half, the war had got started, and because of the same, their priority to buy or to achieve their carbon neutrality had got somehow shifted to the second half. But now we are looking that everything or the demand again as compared to the last year is on track, and we would be able to achieve the guidance that we have given during last calls.
Got it, sir. Thanks for your detailed responses. I'll come back in the queue.
Thank you.
Sure. Thank you.
We have the next question from the line of Mahendra Jain from V2 Wealth. Please go ahead.
Yeah, thanks, man. Thanks, Maniji, for your good set of results. I think sustaining margin. Sir, I'm audible, sir?
Yes.
Am I audible? Yeah, thank you.
Yes.
Sir, my question is regarding the matured market. In Interpol have warned regarding carbon credit fraud, and it's very difficult to control fraud because there is no lack of any central regulator or something like that. So are we facing any this kind of scrutiny from government authorities, or how we manage this thing to certify the things that we are not giving any that kind of or that part of things, or like any KYC regarding your clients or something? What is the process for companies following regarding it?
Yes. So actually, whatever the guidelines that had been issued by Interpol is related to the investments. If you are looking to invest into to buy the credits from the compliance market or from the voluntary market, all the guidelines are related to the same. Actually, we are not into that specific domain of getting the investment from the clients and hold the credits for them. So all those specific guidelines are not very much applicable on us. In our business, we do sign emission reduction purchase agreements from the buyers who are looking to buy credits originated from developing nations. And the transaction is very simple. We do transfer carbon credits from our registry account to their registry account and get the revenue from sale of carbon credits as per the signed agreement. So there is no any chance of getting a fraud. The fraud is related. Actually, the fraud is related to like if someone is holding 100 carbon credits, and for the same 100 carbon credit, if we'll do take investment from 5 different investors, and then doing misinterpretation or giving wrong information to the investors that we are that specific investor or the fund management company is holding 500 carbon credits for 5 different companies. So all this different frauds had been observed at European Union emission trading scheme or UK emission trading scheme. Since we are not working in all those specific markets, compliance markets, and we are not into the business of getting the investments and holding the credit for our investors. So all such kind of frauds are irrelevant to our business model.
Okay. Sir, one more thing, sir. Where we see our company in next 3 years and as a pricing pattern of voluntary market, sir, can you just little bit guide us?
Yes. So as during the statements that had been given during the call, so we are looking to generate or supply around 1 billion carbon credits by year 2027. So we are on that specific track to supply the credits to the international voluntary markets. By that time, we do anticipate that the domestic emission trading schemes, not only in India, while in other nations like in Turkey or in Southeast Asian nations or in African nations, emission trading scheme will do get their own position, and so we would be getting, apart from that 1 billion carbon credit that we are looking to supply in the international voluntary markets, we are anticipating that additional growth opportunity will be able to get during the same point in time. And so definitely this expansion to the domestic emission trading markets definitely are going to support our top line and bottom line. So this is the growth path.
Sir, can you a little bit pricing of
yes, so
it will remain same as it is, or the demand will increase, so price may go up around that 2027 like that?
Yeah, so as per the researchers, if we'll do find over the Google done by Bloomberg or maybe McKinsey or maybe by BCG, they are anticipating that the market size will do increase from $1 to $2 billion as compared to year 2021, calendar year 2021. It is being anticipated by year 2025, by year 2030. The market size only for the voluntary carbon markets will be around $50 to $100 billion. So definitely, as the market size will do increase, and the supplies are not will not follow the same path as compared to the demand, and definitely we are anticipating that the price is that is a global phenomenon. The demand is high and the supplies are less, so the prices definitely will go up. So as looking as with the present economical scenario or political scenario across the globe, we are anticipating that the market size will increase, the demand will increase, and so the prices will do follow the same path.
Sir, last question, sir. Are we looking more players into this field in next 10 years in India, sir? Like, are we expecting more players to come so the market can become more matured like this?
It depends on the competitors, how are they going to get positioned themselves. But our position is very well defined that we will do supply 1 billion carbon credits, having maximum market share in developing nations.
Okay, sir. Okay. Thank you, sir. Thanks a lot.
Thank you. We have the next question from the line of Nikhil Oswal from Oswal Finance. Please go ahead.
Hi, good afternoon, everyone. This is with respect to the inventory. Based on what you have given in the investor presentation, am I audible?
Yes.
Yes.
Yeah. Based on the inventory
numbers given in the investor presentation, see, H1 sales is 38 million carbon credits and corresponding value comes to 957 crores. So I arrived at an approximate figure of like 250 rupees per carbon credit. Now the stock in hand what we have on 30th September is 10 million, and which should essentially translate to around 250 crores of inventory. Then why is the inventory valued at 142 crores? Could you just elaborate on that?
See, Maniji, can I continue?
Yes, please.
Yeah, hi. I just want to say inventory valuation is being done on the basis of cost or market value, whichever is lower as per the accounting standard. And we always value, we have already explained in the previous calls also, we always value the inventory on a cost. That's why you are finding that 10 million carbon credits valued at 144 crore, which means its market value might be in between 225 to 250 as of now.
Sure, fair enough. Just wanted that clarification. And another question is, on page number 31 of the investor presentation, it says that there are no restrictions on voluntary carbon exports currently from India. So I wanted to check what percentage of our sales are voluntary carbon credits, or rather voluntary carbon exports.
Yes, Mohit, I will do cover the same. So actually, Article 6 of the Paris Agreement do not, or any domestic law across any developing nation, do not govern import and export of the voluntary carbon markets. As of now, whatever the credits, carbon credits that are being generated during last 5 years in any developing nation used to get sold in the voluntary market. 99% of the credits used to get sold in the voluntary market, since there is no any compliance market. The compliance markets under the Paris Agreement or under the domestic law are going to get themselves positioned in the next 3 to 5 year timeline. And so, in our the volumes for last 5 years, not in fact last few quarters, but during last 5 years, 100% of the volume used to get sold in the international voluntary markets.
Okay.
Yeah.
Okay. Thank you.
Thank you. We have the next question from the line of Jay Kumar Patil from SG Palkundri and Company. Please go ahead.
Good afternoon. Is my audible?
Yes, you're audible, sir. Kindly
Yes,
proceed.
sir. Just my question was, the sales go decreasing quarter by quarter, because in September 21 it was 443, December it got to 681, 687, March it again reduced to 475, June in 508, now it's a 449. It's more or less the last year's the figures are there. So what's the reason why the sales are decreasing year quarter by quarter, and what are the actions you are taking to increase it?
Yes, so I stated during the last conversation, the second half for our carbon markets used to give stronger results as compared to the first half. And so on quarter to quarter basis, there may be some differences, but if you do analysis on a half year basis, then it will give you the proper estimation about the performance of the organization, because all the quarters never remain the same, as the buyers who are based at the developed nations, they want to exhaust or they want to achieve, they want to exhaust their budgets that they had kept to achieve their carbon neutrality or net zero journey to attain that specific goal. So December month is very important for our industry. The quarter 3 and quarter 4 to exhaust, and for them it will be quarter 4 and quarter 1. So to exhaust, to achieve, to exhaust the funds that they had earmarked for the achievement of their carbon neutral goal or net zero goal, they used to do procurement during that specific 2 quarters. And that is the reason the first half of our Indian financial system used to be weaker as compared to the second half of our financial system for our specific results.
One more question I want to. At the share prices since last 10 months, it is you can say reduced by 40%.
Yeah.
So any other reasons other than?
Yeah. So our main goal is to generate or to develop carbon credits and supply to the international carbon markets. We are very well positioned in reference to the market share that we do have, not only in India, in all developing economies, and we are doing and we are very well placed in all those specific results. Further doing expansion of the organization at the upward integration, downward integration, or the integration with the technology world or financial world. We are very well positioned in all different aspects, whatever that can be achieved in our carbon markets. So in the business aspects, we are very well positioned, while it depends on the stakeholders how they position themselves. So I would not be able to comment on that specific aspect, but would be able to comment over the specific business performance in all different verticals that we are working.
Thank you.
Thank you. We have the next question from the line of Sanjay Sharma from Octopus. Please go ahead.
Yes, hello everyone. Can you hear me?
Yes, please proceed.
Yes.
First of all, congratulations, Mr. Dakara, for a good result. And I have very specific questions. Number one question is, besides the voluntary market, is there a compliance market too? Question number one. Question number two, if yes, how big is it? Question number three, is the compliance market likely to go up with countries passing new policies?
So as I was well understood, if your question can please do make me correct. So the first question you have asked is, what is the difference between the compliance and voluntary market? Is it the same one?
No, not the difference, but is there a compliance market too? Does it exist along with the voluntary market?
So to understand, there are in our carbon markets, there are two different categories. One is the compliance market, another one is the voluntary market. Compliance market can again be divided into two parts. The compliance market driven through the international treaty, and the second one is the compliance market driven through the domestic law. So as you know, from year 2005 to year 2020, there was a treaty called as Kyoto Protocol, and as per that Kyoto Protocol, it had been decided that all developed nations should reduce their emissions, and if they are not able to reduce, they can buy carbon credits originated from developing nations like India and China. And so that specific market is called as the compliance market under Kyoto Protocol. And now we are into the Paris Agreement era that has been started from year 1 January 2021 and will do end up to year by the end of the century. And under the Paris Agreement, it had been mentioned, or it had been accepted or negotiated by all the nations that now the accountability is there with all the nations, either developed, developing, or economies under transition or underdeveloped nations. And so each nation had declared that they will become a
Sorry to interrupt, your line is breaking. Can you please repeat your last line? Manish sir?
Can you hear me?
Yes.
Please proceed.
Yes, Manish.
Yes.
Sir, your voice is breaking. Ladies and gentlemen, we have lost the connection of Mr. Manish. Kindly.
I think Michelle, yeah, he will join from other network. Let's wait for another 2 to 3 minutes.
So kindly stay connected. while I try to reconnect him. The line of Mr. Manish is also connected now. The line of Mr. Manish is connected now. Sir, kindly proceed. Ladies and gentlemen, the line of Mr. Manish is disconnected. Kindly stay connected while we try to reconnect him. Manish sir, can you hear me? Ladies and gentlemen, please stay connected while I try to reconnect Mr. Manish. Manish sir, can you hear me?
Yes, yes.
Sir, kindly proceed.
Yeah. Hello, can you hear me now?
Yeah, we can.
Hello.
Yes, Manish, you are audible.
Yes.
Would you like me to repeat the question?
Mr. Sharma, can you please repeat the question?
Okay. What I asked was, besides the voluntary market, is there a compliance market also? And if yes, then how big is the compliance market compared to the voluntary market in percentage terms?
Sir, we are not able to hear you.
Michelle, I will suggest take down the question from Sharma, Mr. Sharma, and we will get back to him on his mail ID if it is possible.
Thank you, sir.
Yeah, I would be happy if you can do that.
Sorry, sir. Sorry for network issue. We will definitely get back to you through the mail. Is it okay?
That would be fine, sir. He said it's okay.
Okay.
Are we taking more questions?
You can move to next question. Yeah.
Okay. We have the next question from the line of Dipanshu Soman from Shivansh Holdings LLP. Please go ahead.
Hi team. First of all, congratulations on a very nice numbers reported, and especially on the balance sheet side. Two questions I have. One, I see an increase in the trade receivables. So any explanation for that? And second, the carbon credit prices, YTD, I think they are down. So are we looking to mitigate the revenue shortfall through increase in volumes, or what is the strategy over there? And the third question is on the AIF side, what we are trying to create, has the capital allocation already been done, or is it a timeline that we are going to do this capital allocation of say 200 crores? And if this fund, how we are thinking to deploy, and how basically it is going to increase our presence in the ESG market? How do we see this?
Okay. First, can you repeat your first question?
So the first question was on the
I believe it was
receivable part. Yeah, the receivable part.
Yeah. I will confirm you that our receivables are always between 15 to 20 days on a client basis. There are various clients where we are offering a credit line of almost 5 to 7 days also. That means we are receiving the funds well within the norms and the contractual agreements. However, sales are being done in a different timeline, be it a month end or quarter end or whatsoever, and due to that, our closing balances, if you will check our last quarters also, that is also in the range of 319 crore, and now it is 15 crore, which is almost the same. And I will confirm you that we have received almost 80 to 90 crores during this quarter, during this month only itself. October itself. That means our debtors are in line with the contractual agreement, and our overall working capital is well within the 1 month's time horizon, and we are very much hopeful that we will more reduce in near future as per the business requirements. That is the first question. I have answered you. And second question you have asked on the profitability per credits, right? Profitability and how we are going to manage all these things in the future. We are deploying the funds, whatever the accruals which we are accruing from our own business in development of our own projects like community-based projects and nature-based projects. However, nature-based projects is taking a time, its gestation period ranges from 4 to 6 years, while community-based projects like distribution and implementation of the improved cook stove, that takes approximately 20 to 24 months time horizon. That means, so in that scenario, we are very much confident that down the line after 1 year, all these our investments which we are developing our own projects and infusing money in that, that credits will get started after 12 to 18 months time horizon to some extent. And in full-fledged, it will start after 18 to 24 months, and that will give us a good bottom line as well as the top line, apart from the existing business which is going on right now. And that existing business will also have a 20% or 25%, which our MD has already given a guideline, approximately 20% unit growth, that will remain there. So in that way, we are very much confident that our bottom line, or you can say per credit realization, will remain same, or it will grow after 2 to 3 quarters.
Okay, I got the point. I just wanted to check how were the trends for the quarter-on-quarter price of in the voluntary market. So whether the prices were stable or whether the prices were declining on a quarter-on-quarter basis?
The prices are stable. If you will check that, our average realization is in between $3 to $3.25 approximately. On an average, I am talking about.
Okay, so the prices were stable for the last quarter.
Yeah, prices. Yeah. Now coming to your third question, deployment of the.
Mohit, I want to add one thing. The average prices that we have observed for the sale for the carbon credits during last financial year is almost the same during this financial year. So so everything is quite stable in reference to the prices.
Sure.
Yeah, his third question was ICAM investment plan, how we are going to take that.
Please take it forward.
Oh, thank you. Yeah, sir, I just want to explain you that 200 crore which we have given the earmarked fund, which we are going to deploy in next 6 to 8 months time horizon from our own approval. And by investing this, we will act as an implementation partner also. That means whatever the fund will be generated by the dedicated fund, that is the fund we are creating in Singapore, EKI will act as an implementation partner, and EKI will no doubt take a benefit of 2-3 things. EKI will get the share, whatever the credits will be generated as per the prudent discussions and between both the parties. Apart from that, EKI own investment will give us 100% credits supply in near futures. And third benefit is our climate, our footprint, or you can say our will be in global markets in climate finance marketplace also. These are the 3 broad benefits which we are looking right now, which will flow to the EKI. And these all type of our own developed projects, be it in a community-based projects or a nature-based projects. This will give annuity returns for next 5 years for community and next 25 to 30 years in nature-based projects. So that is the annuity which we will get in near futures, and that will make our top line and bottom line additionally from the existing business.
Sure. Got it.
I believe we have answered. Yeah. Thank you.
Yeah.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and 1. We have the next question from the line of Milind Raj, an individual investor. Please go ahead.
Yeah. Sir, my question is, in the investor presentation, you have given the pipeline of credits, which says that, till financial year 24, it will be 375.6 million. So is this the order pipeline, or you are saying that this will get produced by your projects?
So for that specific number or the volume, the high volume that we are going to generate, the contracts are already there in place. That means we have got the contracts from the sellers or the project owners. We are working on all those projects which are there at the validation stage, validation and registration stage, then secondary verification and issuance stage. So the contracts are already there in place to answer, and those credits will get delivered during the second half and during next financial year.
Okay. So going by the average, then are we saying that we'll achieve almost like 10 times of what we have achieved in this first half?
So it depends, like various projects are there at various stages of preparation of the documents, submission to get issuance, getting the issuance approvals. So the guidance that we have given for this financial year, we are well pleased on the specific on the specific guidance that we have given for around 100 to 105 million credits during this financial year. During next financial year, definitely at the right point in time, we will be able to give you the best position depending on the credits that you will be able to get issued during next financial year. But as we are anticipating, if everything remains fine, depending on the issuances that we would be able to get on time from the secretariat, the program secretariat like Clean Development Mechanism, CDM, or Verified Carbon Standard, Gold Standard, or Global Carbon Council, and that much volume definitely would be available with us before end of next financial year.
Okay.
And that is going to contribute. That is going to contribute, all these volumes are going to contribute to our 1 billion carbon credit goal. That means 1,000 million credits. Already almost 200 million credits we have achieved. This 400 million will make 600 million credits, and remaining 400 million we would definitely be able to achieve before year 2027 in the international voluntary carbon markets. So that is the position that we have in the present scenario.
Okay. And sir, my second question is if you can share an update in terms of the JV with Shell as to how much Shell has invested so far, and what if at all they have invested full amount, or what if they are doing in tranches. And since I understand these are nature-based solutions, the revenue from this project will start only after 5-6 years. Is that the case, sir? And it will be very long term?
Yes. So nature-based credits as compared to technology or community-based credits, they used to get a longer crediting period from 30 years to 90 years, while the technological-based credits used to get crediting period. The crediting period means the period for which, during which we would be able to get issuance of carbon credits. So that is the crediting period, meaning So for nature-based solution projects, specifically, as you know, the plants or the trees, they used to take time to grow at the substantial stage, and so minimum 4 years is a timeline or gestation period which is required for nature-based solution projects. 2 projects already being onboarded, which are going to get invested from Shell, and we are anticipating the similar number we would be able to achieve during the second half of this financial year. Further, apart from the investments, the projects which are invested credible, wherein the Shell is invested to onboard the projects. Apart from that, we are also having good number of projects for which the investments are already been done, or the other investors are there, and we are giving the advisory services, because under that specific JV we have 2 targets. One is giving advisory services for the projects which are already got investment opportunity, and another one is the projects which are looking for the investments. So the 2 projects which are looking for the investments are already onboarded, while many similar projects which are already got investment opportunity. So we are only giving advisory services for those projects. Many projects are there which are got onboarded. So that specific goal of joint venture is well placed, and the other relevant information related to the investments, the types of credits are confidential in nature as of now, and definitely at the right position or right point in time, we will make the specific disclosures.
Okay. So you are saying then you will not be able to disclose the amount of investment by Shell, is it, sir? In terms of
yes, as present point in time, whatever the information disclosures which are required as per law, definitely we will make the disclosure. But as of now, it's this specific information are confidential in nature.
Fine, sir. Thank you so much for your time, and all the best for future.
Thank you.
Thank you very much.
Ladies and gentlemen, due to time constraint, that was the last question that the management could answer. I would now like to hand the conference over to the management for closing comments. Sir, any closing comments?
So thank you very much, everyone, for joining this call, and we wish you all very high success in your specific areas of working. Thank you very much for joining this call.
Thank you, everyone. And if anyone left out from taking the questions from our side, I'm requesting to share that question with our IR partner so that we can answer in a due course. Thank you.
Thank you. On behalf of Nuvama Wealth Management, that concludes this conference. Thank you for joining us, and you